Hello everybody. So today I wanted to do another stock market overview, and I wanted to start the day off a little bit different. I wanted to talk about this website. It's called investing.com, and they have this cool little tool here where you could actually go to tools. You could look at the economic calendar, and then you could find all sorts of economic data, and you could filter this out by just looking at the United States. So if I look for tomorrow, we have a lot of data coming out. We have average hourly earnings. We have government payrolls, manufacturing payrolls, non-farm payrolls. We got unemployment rates, and a lot of other data. So the reason why this is important is because a lot of investors hold off until they actually see this data. So what that looks like is that we could actually see lower volume days because people are essentially waiting for that information to drop before they make any big moves. So if I look right here, we can see that SPY volume was actually a little bit low today, despite all that selling. And you see that our volume is 104 million versus the average of 109 million. So to me, this tells me that people are waiting for something, which is probably that jobs report tomorrow. So tomorrow we'll probably see a lot more volume, just given that it's the end of the week and we have some economic data that's about to drop out. So looking on the SPY, I just want to go on the price action for today. Now, this is, when I see things like this, I definitely get a little worried because when you see these pre-market gap ups, you gotta wonder what's going on. And clearly, I mean, we sold off pretty hard here. And then where did we bounce? We bounced right at around 433.80. We rebounded, and then we ended up at 435.71. So to me, I want to pay attention to this 433.81 level. So we're going to zoom out. We're going to look at the 1 year. We're going to see what that looks like. That's this right here. So if we ever get a close that is under this level, I think it's very likely that we could go back to this 428 area. And then hopefully we don't close under that. And if we do, then I think what's very likely is that we could close this entire shoulder right here. So this could essentially just be one massive head and shoulders where this is the left shoulder, this is the head, and then we could draw out this right shoulder that goes all the way back down to 403. So that's definitely one of the risks that I see in this market is this gap close all the way back to 403. So I'm not saying that if there is a bottom that that's the bottom, because I mean we could go even lower than that. But I'm just saying that if we do have a bottom, this is a very likely bottom right here at around 403. So just looking at this chart again, I mean, we have this 20-day moving average that's curling underneath the 200-day moving average, and it's quickly approaching the 250-day moving average. So things don't look too good right now, and we're respecting this downtrend, and it looks like we're about to, in the next few days, we'll know how this rounds out. So we might just round out. We might hit this 438 or 433.83 level, and then we could bounce. Maybe we just double top here. We go all the way back to this 50-day moving average, and then go even higher than that, and then fade. So a lot of things could happen in this market. So just keep that in mind. You don't have to just form out this. You don't just have to form out this upside down parabola and just go straight down. I mean, the market's gonna probably hurt as many people as it can on its way up or on its way down. So looking at the Nasdaq, I mean, the Nasdaq just basically went straight down, and it had these higher lows and lower lows this entire day. So it doesn't look too good. I mean, let's look at the volume. The volume was not too great either. Let's look at the 1 year. So yesterday we talked about the 50-day moving average falling underneath the 200. So that's the death cross that everybody's talking about. And things don't look too good here. So we're basically respecting this downtrend. And we had this little pop right here, but you can see that we rejected the 20-day moving average around 348.81. And in the pre-market, we actually went a little bit above that. So going back onto the year. So things don't look too good here. I mean, if we get above this 20-day moving average and we break this downtrend, things might look a little bit better. But thus far, we have this 50-day moving average curling under the 200-day moving average. So something's going to have to happen here really quick to reverse this if we do want to be a little bit more bullish. Now, looking at Microsoft, you can see that we had this breakout, but it looked like a false breakout. So you can see we had some resistance right here at 303. So it looks like about 303. And you can see this 20-day moving average falling underneath the 200-day moving average. And our current price action is actually right on this trend line. So it's we're at 295.92. So we're basically right there, like right in the cross section of this downtrend and this previous uptrend. So we're right in between these trend channels. So in the next few days, we'll see, do we get back in the trend channel and start moving higher, or do we continue to fade down in this current trend channel? So if I zoom out, you can see this a little bit more clear. Now we look on Amazon. Now my worry for Amazon is that this could fade all the way down to this area right here around 2,762. But if we fall underneath here, there's really not a whole lot of support for the next few $100s. So this is definitely a pretty big risk that I'm paying attention to. And if we look at the moving averages, we have the 20-day moving average curling up, but we have the 50-day moving average curling down. Now, paying attention to Apple, basically rug pulling people at every step of the way. But ultimately, what I'm seeing right now is that we're moving between the 100-day and 20-day. So we're just kind of zigzagging in between. So if we do get past the 20-day, the next resistance is going to be right here on the 50-day, which is 170.80. So my biggest worry for Apple is if we break underneath this 20-day or this 100-day moving average and we make a decisive move down. And if we zoom out, you can see that the bottom of this upper trend channel here will probably be around this 154 area. So it's very likely that Apple, if we do continue to fall, could fall down to this trend channel. And this trend channel, as you can see, if I zoom out, goes back quite a bit. And this trend line extends all the way out to, could probably go all the way out to 2019. Now, I know a lot of people are saying buy wheat, but honestly, just look at this. It's straight up. Do you really want to be buying here? There's a lot of risk here. So I would say avoid wheat. If you didn't get in this move here, then you shouldn't be getting in this move here. And that's basically all I want to say, because if you do get in at the tops, you're likely going to get hurt, because things like this, everybody piles into it, and by the time you hear it on YouTube from some YouTuber or whatever, by the time you hear it on CNBC, I mean, this move is already pretty exhausted by that time. So definitely avoid the hype on wheat. And same with fertilizers. So a lot of people are talking about Mosaic. And let me just point out right here that there's probably going to be a lot of resistance right here around this $60 area on Mosaic. So you've got like $5 of reward here, or a little bit less than that, and probably quite a bit of downside. So don't be jumping into these hype names like Mosaic or wheat ETF, and don't get in oil, don't get in gold. I mean, if you're not in it already, you're probably a little bit too late. So I want to talk about XLF. Now I'm getting a little worried here just because seeing some weakness, and basically if we get underneath this trend channel right here, we could come back and we could do a fourth retest on 3681. And the more we're retesting these lows, the more likely that the next time we fall, we could actually break below it. So if we do break below this 3681 area, then I think it could be very likely that we fall to 3536 on the financials. So definitely something to pay attention to. And we're still underneath the 200-day. And oh, one more thing to note. We actually got to the 200-day intraday and we rejected. So something to pay attention to. We basically moved between this 200-day moving average and this trend channel. And lastly, I wanted to talk about the VIX. As you can see, we're still above 30, so the risk is still there. VIX still has the bull trend. So until we see a lot of volatility subside in this market, I think you got to be very cautious and you got to expect crazy moves to the upside or to the downside. And I hope you guys enjoyed this video and stay safe out there.